Hello to all the passive income investors trying to generate passive income through dividend stocks. In this video, I'll bring you my top 10 dividend stocks to buy now. I'll also reveal how my portfolio of dividend stocks or my recommendation for top dividend stocks has performed so far year to date. So let's jump right in. Let's take a look at these 10 dividend stocks to buy now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the first batch of 5 dividend stocks, and then I'll go to the next batch, including Visa with a dividend yield of 0.72%, Altria Group with a dividend yield of 8.81%, Nike with a dividend yield of 1.53%, Starbucks with a dividend yield of 2.48%, and eBay with a dividend yield of 1.97%. Now, you might be looking at these dividend stocks and specifically the 4 lower than Altria Group. You might say, well, that's not a very robust dividend yield. And I'll take a moment to explore my dividend generating strategy here. I look for companies that can sustain and grow their dividend payment over the longer term. I may overlook companies like Visa that offer a low dividend yield because of their potential to continue increase the dividend payment over the longer term. So I'm willing to invest in companies like Visa, which I do own, because of the potential for dividend increases. And that might be surprising to some of you dividend stock investors who might be looking for dividend yields right now, robust dividend yields right now. And this is a bit of a different strategy. This is more of a longer term strategy where I'm looking at 10, 20, 30 years from now, the potential for these companies to have much higher dividend payments than they do today. And I feel that is the case for 4 out of these 5. Altria Group, I don't think has very much room to increase the dividend payment, but it already has a very nice dividend yield at 8.81%. The other 4, I think, have very nice potential to increase their dividend payments over the next 5, 10, 20, 30 years. And that's why I recommend them as excellent dividend stocks to buy today. Now, so far year to date, this is the performance of these 5 dividend stocks. eBay doing the best so far at 19.11% return, and Nike the worst at negative 14.17% return. Starbucks negative 7.15%, Altria Group 11.58%, and Visa at 4.12%. Overall, 3 out of the 5 are up and 2 out of the 5 are down year to date in 2024. The next group of 5 dividend stocks I'm recommending today are Target, Coca-Cola, Home Depot, the Walt Disney Company, and Caterpillar. And again, you see 5 companies where their dividend yield might not be great. Coca-Cola does have a 3.02% dividend yield, Target at 2.72%, Home Depot at 2.55%, Caterpillar at 1.55%, and Walt Disney only 0.27%. But all of these 5, including Walt Disney, I expect to have increases in their dividend payment. Most notably, Walt Disney. Remember, Walt Disney paused its dividend right after the onset of the pandemic. It only recently brought its dividend back, and I suspect it will grow this dividend really quickly over the next couple of years as the streaming segment is expected to turn profitable later this year. That's going to boost the company's cash flow, and the theme parks are absolutely thriving, and so dividends are likely to increase for the House of Mouse, as are dividends for the other companies mentioned here who have strong profitability, strong cash flow, and I suspect they'll be able to increase their dividends over the next several years as well. Now, the performance for these 5 dividend stocks are much better. Walt Disney Company at 23.24%, the best out of these. Caterpillar at 14.6%, Target at 13.89%, Coca-Cola 5.47%, and Home Depot, the only negative in this group, at minus 3.12%. 4 out of the 5 are positive, while only 1 out of the 5 is negative so far in 2024. Now, I'll remind you all that when you're investing in dividend stocks, it's important to consider that you're exposed to the risk of the fluctuating stock price. That's why I've discussed those in this video. You can buy the stock and you might get a really good dividend yield, but then the stock price drops by more than the dividend yield you're getting. So if you're getting a 10% dividend yield and the stock price drops by 12%, what good was that investment? You actually lost wealth there. So it's important to consider your total return. And that's what I've done here, is look at the total return and the potential for total return over the long term. Now, I'm going to compare my performance of these 10 dividend stocks versus a broader ETF. And the ETF I'm going to compare with is the SDY, which is a S&P 500 dividend ETF. So far, year to date, that has done 2.73% total return. I'm going to compare how my portfolio has done versus the dividend ETF. So you could take a look at if you want to invest in my picks, or if you think the ETF is better, or you just want to judge my performance. I want to make it available and transparent so you could see how these stocks have done year to date. So the average return of my top 10 stocks year to date is 6.76%. 6.76%, as you could see here. In fact, I can make this a little bit bigger so you could get a better view of that. 6.76%, the return on the top 10 dividend stocks, and the S&P 500 dividend ETF at just 2.73%. So my list has more than doubled the performance of the broader dividend ETF, a robust outperformance to be sure, a more than 100% outperformance so far in 2024, with 7 out of the 10 stocks being positive and 3 out of the 10 being negative, as I've highlighted there in the reddish pink highlight for the negatives. Now, I often say, don't expect my outperformance like this to continue for the rest of the year or for any longer term period. This type of outperformance is extremely rare, and just by chance that it's so large for this selection of stocks. If I was able to do this kind of performance for a longer time period, I probably wouldn't be on YouTube making videos, right? I've said this before. I'd be managing maybe a dividend stock portfolio for some large hedge fund and making a lot more than what each one of these videos, unfortunately, not very much makes on YouTube. So take these results with a grain of salt and understand that this is a short-term performance, a short-term outperformance. It's nice, of course, that these 10 dividend stocks that I've recommended have outperformed the ETF. But I also have to zoom out and remember that this is just a short-term outperformance, and it's not for the longer term just yet. There isn't enough performance data to measure this for the longer term. So these are the 10 stocks that I think are the best still for the rest of the year, as the factors that had me recommend them to begin with are still driving returns for these excellent 10 dividend stocks that I recommend to buy today. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.